This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, March 6, 2015. Euro dollar. So the key development in the euro right now is a break to another 11-year low, with the market taking out critical psychological support at 110. The break below 1098 this week has confirmed a lower top at 1535 and does expose a measured move downside extension over the coming weeks to 106.65. At the same time, if we look across the daily, weekly, and monthly timeframes in the euro, we shouldn't ignore the fact that technical studies are severely oversold and there could be some form of a short-term bounce before we see any immediate resumption of declines down towards 106.65. But at this point, a break back above and a close above 112 would be required to take the immediate pressure off the downside. Sterling dollar. So cable looks to be resuming its downtrend after stalling out in the previous week above 155, and the market is now focused on a move back towards the 2015 low at 49.51. At this point, only a break back above the 155.50 area would negate or delay the current bearish outlook. Dollar yen. So dollar yen has been slowly grinding higher since breaking out from some critical triangle resistance several days back, and the market is now focused on a retest and break of the 7-year high from December at 121.85. A push above 121.85 will open a bullish continuation of this intense uptrend towards 125 further up, and at this point any setback should continue to be very well supported ahead of 117, with only a break below 115.55 to compromise the bullish outlook. Euro Swiss. So Euro Swiss has been comfortable trading within a consolidation over the past several sessions since topping out at 108.15. The market could see additional declines in the sessions ahead, but only back below 104.15 would negate the current recovery outlook in Euro Swiss. A push above 108.15 would open the door for fresh upside towards 110. Aussie dollar. So Aussie has been comfortable consolidating over the past several sessions above the recent multi-year lows at 76.25. A break above 79.13 would delay the current bearish outlook and open the door for a more significant correction, while the market's ability to hold below 79.13 would suggest that this is a bearish consolidation ahead of a fresh downside extension eventually below 76.25. Dollar CAD. Dollar CAD has been consolidating since reaching fresh multi-year highs, 5-year highs at 128 back in late January. But the market is favored eventually to trade above 128 and to continue this bullish uptrend towards the 2009 peak at 130.65 further up. Right now, 23.50 has acted as formidable support, but a break below would suggest that the market's poised for a more significant correction before resuming the uptrend, potentially down towards the 119.50 area. So pay attention to 123.50 today to see if the market will close above or below, or if it holds above. Again, a break below wouldn't negate the bullish structure of this market, but would only open the door for a more significant correction before looking for a bullish resumption. Kiwi dollar. So the 76 area continues to act as a formidable resistance point. The 76 area had been formerly a very strong support zone in this market in 2014, and we've once again stalled out here ahead of the latest bearish reversal. At this point, a break back below key support at 74.22, the low from the 24th of February, would be required to strengthen this bearish outlook and open the door for a retest of the recent multi-month low at 71.76 further down. SPX 500. So the story in the SPX 500 is one of continued record highs, with the market last week putting in another fresh record high at 21.20. But we have since seen a little bit of signs of topping, with the market triggering a double top formation on the daily chart, taking out key support at 21 and exposing 20.80 further down. Look for a break below 20.80 to confirm the topping outlook and accelerate declines and opening a more significant correction to the downside, while inability to take out 20.80 will still keep the pressure on the top side on a medium-term basis, and a break back above 21.20 would negate the topping outlook and open the door for fresh upside and fresh record highs up towards 21.50. Gold. So gold has been having a hard time recovering after breaking down in January off those 1308 area yearly highs. But if you look back to 2014, the market does appear like it could be in the process of carving a more significant longer-term base, with upside seen eventually back above 1308 and towards the 1345 next resistance point from the July, the summer of 2014. At this point, Only a close below 1190 would negate that longer-term or medium-term recovery outlook, while a pushback above 1223 would do a good job of strengthening the spacing outlook and accelerating gains.